Welcome to the latest Business Finance Bulletin, episode 212. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, equity finance sees tough first quarter of 2018, bad debts on the rise, and Barclays raises awareness of cybercrime. If you're a limited company, one way, of course, of raising money is via selling shares in your business or selling equity. Now, if you've been watching the last couple of bulletins, you will have known I've been reporting that traditional bank lending, in terms of money lent by banks, has been flatlining at best or slightly declining. And now there's an element of cautiousness coming from the banks and also cautiousness amongst small business owners when it comes to borrowing. Well, according to the latest research from Beauhurst, the equity finance market is also taking a little bit of a hit as well, especially during the first quarter of 2018. Beauhurst estimate that from publicly available data, there were 329 deals in that first quarter, raising a total of £1.3 billion. So those number of deals, though, were down 10% on quarter 4 2017, and the value of the deals at 1.3 billion was down by a whopping 59% compared to the quarter 4 2017. So we can see there's a big drop there in the amount of money raised via equity. What about crowdfunding, which forms part of those numbers? What's that sector doing? Well, Beauhurst estimate that there were probably 83 raises via crowdfunding platforms in that first quarter 2018, raising a total of £54 million. Who are the players? Well, first of all, top of the tree is Crowdcube. They had 35 deals and raised £21 million. Cedars, 32 deals and raised £14 million. So we can see that there's some good activity going on the crowdfunding level. But overall, it does seem that that first quarter of 2018 was a bit of a challenge when it comes to raising equity. Unfortunately, I'm continuing the doom and gloom in the first segment by taking a look at the latest report from Creditsafe. Now, Creditsafe is a credit reporting agency, and they got access to a lot of data about all UK companies. And they've taken a look at activity levels during the first quarter of 2018, and they focused on a couple of areas. First of all, bad debts. Now, bad debts, of course, arise when a business doesn't pay you and you have to raise a provision or even write off that amount in your accounts. Now, Creditsafe said by looking at the numbers, they estimate that the total amount of bad debts raised in the first quarter of 2018 stood at £739 million. And that is an increase compared to the same period in 2017 of, get this, an increase of 366%. Yeah, 360% jump in the value of bad debts. Now, Creditsafe do say that there is one firm skewing that figure, which left a wake of bad debts behind it, total £560 million. So there's a large portion there, but the underlying trend is up. Also, that's demonstrated that upward trend in pressure by the increase in the number of county court judgments being registered. Creditsafe said they saw a 23% jump there to 18,781 CCJs registered. So again, that is a particularly poor sign. But to cap it all, they estimate in the first quarter of 2018 that there was a 28% increase in the number of business failures. So not looking particularly strong in terms of this first quarter. So, it is a bit doom and gloom, but of course, for many businesses, it's still business as usual. So make sure you put your head down, keep an eye on your numbers, keep your favorite customers happy, watch your margins, and of course, make sure that you are chasing your payments so you don't have to report one of those bad debts. As we record this bulletin, we are fast approaching the implementation date for the new GDPR regulations. Now, GDPR is all around data protection, and one core part of this is making sure that your systems are safe from cyber attack. Well, Barclays Bank has just launched a new awareness campaign amongst its small business customers designed to make sure that customers understand the importance of protecting themselves. Barclays, in conjunction with YouGov, undertook a survey amongst its small business owners to find out their thoughts about cyber attacks. And interestingly, 44% of them have said that they have actually been targeted by fraudsters. 23% of them admitted that they were caught out. caught out on average to the tune of £35,000. That's a big sum to have to absorb if you're a small business. Well, what are Barclays saying that you can do to protect yourself? Well, obviously it's about strong passwords, making sure that your passwords are full of capital letters and symbols and numbers. Change your password regularly. Also, make sure that staff are aware about clicking on links in emails, especially from emails from people that you're not expecting them from. If you're receiving phone calls, supposedly from suppliers, staff, or even your boss asking for information or payment, is it real? Is that really the person? And it's all down at the end of the day to making sure that you've got strong controls and systems in place to make sure that you don't get hit. So please just review your whole cyber awareness process amongst your staff to make sure that you keep your money in your bank account and not letting it go into somebody else's bank account. Well, that's it for another bulletin. As ever, I hope you enjoyed it. And if you did, please don't forget to give it a like and a share. So that's it for this week. As ever, I hope you have a great, successful and profitable week, and see you next time.